After months of wrangling, OPEC reaches a deal Wednesday to cut oil production, sending crude futures soaring and seeing the Brent benchmark breaking above $50 a barrel for the first time in a month. Joining us now to discuss is WSJ oil and gas industry reporter Sarah Kent in our London bureau. Hi, Sarah. So how much did the OPEC delegates agree to cut production?
They agreed to a 1.2 million barrel a day cut, which is a little bit over 1% of global production. And it's really on the higher end of what many people had expected. And indeed, right up until this morning, there was a huge amount of doubt over whether or not they would even get this deal done. So the market has reacted extremely positively.
Certainly. Now, put this all into context for us. This is an effort really to get prices back up and regain the cartel's influence over a market that seems to be increasingly dominated by the U.S., Russia, and other players, correct?
Yes, it's really an acceptance that a play the cartel made back in 2014 when they decided to stop interfering in the market and cut production and let oil prices fall didn't work out quite as they had hoped. Production has begun to fall, but prices are still very low. And that has hurt big oil producers within OPEC a lot. Many of their budgets are suffering terribly. Even Saudi Arabia, which historically has been perceived as an extremely strong economy because of its oil wealth, is struggling and having to diversify as a result of this. So they really needed to take action and do something to try and boost prices, sort of admitting that they have not been able to control the market in the same way as they have historically.
And so, Sarah, why has it been such a struggle, though, to get all the OPEC players on board? Were Iran and Iraq the holdouts? Were they insisting up until the last minute on pumping full tilt?
Yes, very much so. I think even in the meeting, we heard from our sources within the meeting that Iraq's oil minister got on the phone to the prime minister at one point to discuss whether or not Iraq would actually cut. Fundamentally, Iraq's position for many years has been that its oil industry suffered horribly under the previous regime prior to the Iraq war. And it has been getting back on its feet and production was recovering. And so they've not agreed historically to participate in cuts. But this year it reached record highs, so the Saudi view was, you know what, guys, you can participate again. The Iranians, same boat. They're recovering from a period of sanctions where their oil industry has not been performing to the level they'd like it to, and they feel like they should be allowed to recover to previous production levels. And actually the compromise was that the Iraqis will cut a little bit and the Iranians are allowed to increase to a set ceiling.
Ah, interesting. And so then is Saudi Arabia then taking the biggest cut?
Saudi Arabia is taking the biggest cut by far, of nearly 500,000 barrels a day compared to a total of 1.2 million, so nearly half of it. They've also insisted that non-OPEC producers should participate as well and announced that Russia has agreed to cut 300,000 barrels a day. So this is another sort of element of the deal that really has yet to be hammered out. I mean, people are reacting well to it today, but there's a lot of details that still need to be revealed.
Sure, absolutely. And there are some market watchers who doubt this deal will last. They point to deals in the past that didn't hold together. They're questioning how this will be enforced. Is that right, Sarah?
Yeah, OPEC does not have the best track record of keeping to these deals when they cut. Saudi Arabia generally does what it says it will do. The others don't. Russia certainly has not done so in the past when it's agreed to participate. So I think they really have everything to prove, and they set up a committee to monitor members' production. But we'll see what actually happens. The deal's meant to come into force in January. So I guess February will be the first point at which we'll really be able to look back and assess the extent to which they're really doing what they've said they'll do.
People will be watching closely, but there are others who say, hey, even if this deal holds together, OPEC is far from the only game in town now, I guess accounting for about 58% of global output. And then, of course, U.S. shale production continues to grow. So is all of this pointing to OPEC's waning influence, even if all goes as planned?
Well, I think this is the big gamble for them, because by boosting prices, they're helping themselves. But as you mentioned, they're also performing a massive boon for U.S. shale producers who, as we've seen in the past, when oil hits around $50 a barrel, start to bring wells online again and start drilling again. So, it's really a kind of dangerous game they're playing, assuming that by doing this, they won't empower shale producers to drill more and bring more production online, undermining their efforts in the long term.
Absolutely. All right. And finally, Sarah, you were listening into the OPEC call all morning. Was the agreement reached quickly at this point today, or were there still some sticking points getting hashed out?
No, it was a long meeting. I think it was 5 hours in total of reporters standing around waiting for the ministers to come out. They had a lot to hash out, but they managed to get there in the end. They all are striking very optimistic tones. They want the market to believe they can make this happen, and now they have to prove that they can.
That's right. At least the market believes it right now, so we'll see what happens. All right, Sarah Kent in London, thank you so much for that.
Thank you.